The real opportunity, though, is going to be when this technology diffuses across the economy, and that would be the adopters.
This thing's been under pressure, but I think somebody also taken a stance here that we're going to see some gains here over the next month or 5 weeks.
All that and more. So let's get to it. Tesla stock is down in the pre-market a little over 2%, sitting at 173.85. I'm not sure what it'll take for Tesla to recover from this 2024 slump. But as long as I have money, I will continue to place protective puts and buy Tesla stock.
This is probably the next big productivity driver, but it's not going to happen immediately. And we're seeing that manifest itself in the stock market, right? So far, what's really worked from AI has been what we call the enablers, the companies that are allowing this new platform to be developed and built out. And we've seen, obviously, some of the stocks go somewhat stratospheric.
NVIDIA.
The real opportunity, though, is going to be when this technology diffuses across the economy. And that would be the adopters. And that's very, very early days. Now, there's been some winners in that already, but boy, it's it's kind of hard to find them so far.
The adopters, winners and losers. For 2024, many would think that Tesla is a loser. I'm willing to bet my bottom dollar that the technology that Tesla is creating with FSD and the Optimus humanoid robot, leveraging what the enablers like NVIDIA are bestowing upon companies, reaping rewards that the stock market has yet to see. But like Mike says, this ain't gonna happen overnight.
What's the Wilson meter look like right now on market exuberance? And don't narrow it down to the silliness of NVIDIA, but how effervescent, how exuberant is a market I want to be in, but I'm scared stiff?
Be greedy when others are fearful, and fearful when others are greedy. Scared stiff, that's one heck of a phrase to use. I mean, the connotation is ripe with fear.
Yeah, I mean, look, there's been some big winners and some big losers. It's been a stock picking environment, quite frankly, really for the last year and a half. And look, we had that major low that was made in October 22, one that we identified as a good opportunity. The one last fall we felt was close, but didn't quite get there. But of course, we had a huge rally. And what's happened, Tom, and I think this is a differentiating feature of our view versus others, is we view the last 4 to 5 month rally as being driven more by very loose financial conditions, extreme liquidity, which is finding its way into the right parts of the market. And the parts of the market that are working are what we call high quality growth stocks. And some of those you've mentioned, and some of those are, but it's not just tech stocks. Some of the industrial space, which are benefiting from some of those heavy handed government programs, for example. Some of the consumer space is having a bounce back, particularly consumer services. And then of course, these companies that are being efficient. And that's really what's been working. And it's been, so in other words, the market's been very good at identifying the winners. It's also been very good at identifying the losers.
Well, that doesn't explain why Tesla is down almost 30% for 2024. Tesla is a high quality growth stock and the money hasn't seemed to be flooding over there. Tesla is also benefiting from a heavy-handed government program, the IRA and others. Yet the market cap benefit isn't being reflected in the year of 2024. And don't talk to me about efficiency. Tesla is one of the most efficient companies on the planet. Industry-leading margins when creating battery electric vehicles. Their operating margins, because they're growing, may be shrinking. Auto gross margins shrinking because they are cutting back on some of those industry-leading margins that they get from making their vehicles. Honestly, I don't get why Tesla is down so much this year, except it's in what have you done for me lately kind of stock market. But I suppose Tesla can show you better than they can tell you.
What indicators are you looking for? Are we strictly talking operating margins here? I mean, how do you evaluate, those sectors you're referring to? Like, which sectors are primed to perform well, given, that focus on high quality growth, on operational efficiency, on the narrowing of that big divide between the haves and the have-nots?
Yeah, it's not really by sector, Damien. It's more by company. It's really company specific.
Oh, I guess the EV sector is experiencing it in mass, despite Tesla having some of the best operational efficiency. I guess I would counter in this regard that it's not company specific, as the entire EV sector is being hammered in the year 2024.
Meaning within sectors, there are companies that are being more efficient than their competitors. And we're seeing that. So that once again, it is, as you say, the haves and have-nots.
So then, Mike, is the key identifying those companies that are going to improve their operational efficiency or selecting those companies that have an advantage over their peers?
Tesla checks both of those boxes, so it doesn't matter?
It's both. And one of those advantages is just sheer size. Having scale, having the ability to kind of manage your cost structure, being efficient with your labor and hiring, and that's a pure scale argument.
For Tesla, check, check, and check.
Then, of course, there are companies who are using various technologies, not just AI, to make their existing businesses more efficient. There are some, what we've discovered is within AI, ironically, the companies that are actually being the most efficient are tech companies. They're the ones who are actually able to reduce labor and headcount, particularly in coding. That's one area where it's been extremely efficient, back office, et cetera. So in many ways, AI is helping to keep the labor market a little bit soft.
Now, I know Mike wasn't talking about Tesla specific, but when I listen to many managers and individuals, analysts talk about the stock market at large, I can't help but give it from a Tesla lens perspective. I mean, all of my money seems to be in that one stock, so can you blame me? What Mike says, though, is highly encouraging. The fear, uncertainty, and doubt that surrounds TSLA right now should be fuel for any individual that's done their research and knows the value of Tesla, the company. While TSLA is being hammered in the year 2024, unnecessarily in my opinion, Tesla the company is dominating the EV space. They have scale, they have industry-leading margins, and this is only going to grow. The energy division has rapid growth. FSD version 12 just had a new version come out, 12.3. I like to see the progress. And while the growth on the vehicle side might be stymied for 2024, it's all in preparation for the next generation vehicle. With Tesla, you simply got to trust the process.
To Tesla, little change, stuck right at $175, 180, basically, over and over.
Yeah, there was some China data out. They sold 30,141 units in February in China. Overall, they sold over 60,000, but they exported some of those Teslas out of China. They're lagging. That's only 7% of the market share. BYD sold about 28%. So they continue to lose that battle in the EV space.
Losing the battle in the EV space in China? Come on, guys. The only thing that matters is EV sales versus internal combustion engines. There is no doubt that Tesla is applauding BYD for having such impressive growth, convincing consumers to go from the internal combustion engine to the electric vehicle. Now, they're happy because of the transition to sustainable energy. I get it. But me, I know that Tesla is the better product. Those BYD customers now will more than likely become Tesla consumers later. They've got the early taste. Those consumers have done the hard part. They've gotten out of the internal combustion engine. The next logical step is to get inside the best vehicle on four wheels.
They're expected to sell 2.1 million vehicles this year. So this thing's ran into some problems along with what Musk has on the Twitter side or X side also. Stock's only up 2% from year ago levels, down 28% so far in 2024. So this thing's been under pressure, but I think somebody also taken a stance here that we're going to see some gains here over the next month or 5 weeks. Saw a trader buy 13,000 of the April 175 strike calls, average debit of about $11.90.
Damn! That is a lot of call options to expire on April 19th. In about a month's time, will Tesla see 186 again? Or are we destined to hit the 52-week lows around 150 or so? If that were to happen, this motherfucker gonna be out a lot of cash, bro. For an individual to make that many calls for an expiration date of a 38-day period is one hell of a gamble. Unless you know something that everybody else doesn't. In conclusion, we we got a little insight from Morgan Stanley's Mike Wilson. How the stock market is selecting individual companies as winners and losers and disregarding particular sectors at large. I don't find that to be true with the EV sector, and even still, if you were individually picking stocks, you would think Tesla would have a better year than the rest of its peers. Down 30% year to date, you would say that Tesla is an extreme laggard even in its own sector. In my humble opinion, this will be the most valuable company in a decade's time. And I'm sure those other companies will be successful. They just won't be able to hold a candle to what Tesla is doing. The sheer scale of innovation and change that Tesla is fostering is going to be magical. That's all I got for you today. Be easy. Peace.